Okay, let's jump into things. Back in a bit better time this morning, 10:36 on the 4th of October. So yeah, NFP Friday. Boom, here we go. So what an interesting sort of week it's been. Look, I'll start off with DXY here because I think, look, NFP. Let me start that again. NFP, in my opinion, is what I call second tier news. Only behind the fact that FOMC is the number one, because that's it. That's the final decision, basically. Everything else are little pieces of the puzzle that we just sort of plug in to get an idea about what they're going to do with the rate decision, the FOMC. So, I put NFP and then CPI in as I said, a second tier. So there's certainly vital bits of information. And we've seen sort of like CPI has been the sort of driving bit of data for what, the last year and a half or so. Like, since everything went through the roof and it's, oh, how much is inflation coming down? What are they going to do with the rates? Oh, if inflation comes down, or they're going to need to cut sooner rather than later. All these kind of bits and pieces. Again, it always comes back to what are they going to do? Oh, this is either in the camp of them cutting, holding, raising. Now at the moment, it's in the camp of sort of, are they going to cut 25? Are they going to cut 50? These kind of things. And so they're the discussions that we're sort of having. Why I think that, NFP is really going to be vital this month, well, today, basically, is because we're right. If we look in, if we sort of weigh up both the technical side and also the fundamental side of things, fundamentally, we know that US is cutting. You can see this in the chart. They priced it in coming down here. Around this section down here is when they actually cut 50 base point, big cut. But you can see failed breakdown. Okay, it's started to move back up. We are really back to respecting this large range here with a failed breakdown over here. So look, the question now is, are they going to cut 25 base point or are they going to cut 50 base point? Again, sorry, 50 base point for a second time. Look, if they get a low print, that's in the camp of, okay, economic data's struggling. We need to possibly keep our foot on the gas, and that would translate to another 50 base point cut. If you get that, another 50 base point cut, remember every time you cut the rates, you're going to see the currency depreciate. So this is what's going to give this move here. If we get a low print, they're going to say, hey, look, we've done the 50 base point. Whether they actually do another 50 base points is irrelevant. This is just how the market will react to it all. Because again, these are just pieces of the puzzle that get put into place prior to the decision actually being made. It's not like one bit of data defines it all. It's just that NFP is what we're trading now or today. This is what the market will do in accordance to this particular bit of data. And CPI and NFP, I call them second tier above, say, GDP, retail, even ISMs, PCEs, these kind of things, because these can be trend changing bits of data. They can sort of set the trend for the next month, well, till the next, either other sort of second tier. So in this case, until the CPI or until the rate decision actually comes. So if we see a low number, it means in short that the economy's, you can't see me doing the little air quotation marks, struggling. And it means that they're going to sort of be like, well, we're not doing enough. We may actually need to cut 50 base point again. And if they say, look, we need to cut 50 base point again, you're going to see the market price that in, and they're going to move down like this. Remember, this was pricing in 50, well, no, it wasn't necessarily 50, it was just pricing in a cut kind of thing. Then when that cut actually came, okay, well, the move's already happened. Like, this is the thing. This is what pricing in is. This move here. This is pricing in. When it actually happened, well, it was very little effect. Like, it was kind of, this tiny little move down here, but this was all the stuff that was done in anticipation. So, you know what I mean? That it's buy the rumor, sell the news kind of sort of thing. So this is why sort of like, if they sort of see weak numbers and they go, oh, look, and you start to hear people talking and they're like, oh, we're definitely going to do 50 base point cuts. Look, you can't believe everything you hear with these guys where they're talking because a lot of it's garbage. For people that are paid some ridiculous amount of money. I actually heard a good thing the other day, and the guy was sort of saying, sort of like, these people are being paid, hundreds of thousands of dollars a year. Do you think they're really going to be giving away their analysis for free? No, of course not. So, you got to take what they say with a grain of salt. But the fact still remains, if you're doing your own analysis with it all, if you see them sort of moving more in, and the economic, by say ASC, if you see the economic data on a fundamental side supporting the idea that they're going to have to do more to stimulate more recovery because they're not getting the job numbers that they want, so i.e. a low print, you're going to see it lean more dovish, more in the camp of a 50 base point cut, which is going to give you a move like this. And realistically, then we just continue this range. This is how it would play out. It doesn't guarantee that we're breaking down to all new lows, but it just means that we're going to be capped here. And you can see that we're capped here. Yeah, this is why. Look at these. This is the call from last week. Where's the? Oh, let me go back. Where was Friday here? All right, let me get this off. Tuesday, Wednesday. So 30th. Yeah. So Friday's. Yeah, so this is where we did the weekend review from here. This was the call, and it's played out to a T. You know what I meant? Like, this is the whole point of doing the analysis and sort of like, planning out and planning ahead. Excuse me. But point is that these are the targets that we looked for, and we've hit all of them. It's gone pop, 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 all the way through here, and it's capped at this big range up here. And of course, if you go back, this big range, it's not just plucked out of the air. This has been an area that we've marked out, and we've had marked out for a long time, because it was support here. On the way down, it was support. Way back up, it's added, there's a little bit of resistance, didn't quite tip it in this area here, but a couple of cents either way of it all. And if you look where it rejected from last night, well, bang, it came right into there, and we're coming back down. So outcomes for today, back to the NFP. If we get a low print, bang, we continue with this range, and we look for a move back down to the bottom side of the range, possibly retest some of these highs. Excuse me. We'll sort of call that as it sort of plays out. If we do, okay, so the flip side of the coin is if we get a big number, we get a hot print, and say, I think, let's have a quick look. I think they're looking at 140,000. 142 previously, expecting 148. So pretty much, flat from last month. So you got to consider the other side of the coin here is, let me just get back to this, did they come in with a hot print, so a high number? So say they come in with, say, 250,000. I mean, look, last year, or last couple of months actually, you wouldn't put it past them. There's been some incredibly dodgy prints. If you remember this point just here, whole market's going, yep, it's coming down, it's coming down, it's coming down, boom, 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 right on thing. Technically, it's coming down. Everything looked like it was set to go. And out of nowhere, they came up with 300,000 or something. And whoa, sure, have a look. I mean, as you can see, I know this point because I remember trading these things. Look at this, right on a Friday, 7th of June. You can see the date down the bottom here. I remember that because I got snapped out on a lot of stuff, and I'm sure a lot of people did because it just took off and went because it came up with 300,000 or something. Later months, of course, when we get to, I remember saying, I was trading with a mate at the time, and I was like, if we get to next month and they revise that down, we know that it's dodgy. And of course, they revised it down. So we know that these things can be iffy. And, later on, somewhere around here, they came out and said, whoops, oh, sorry, we actually over uh, reported, not even estimated, over reported 800,000 jobs. So you got to take these numbers with a grain of salt, but again, you got to trade off what the market is presented. And in this case, back here, for example, it was a dodgy number. We knew it was a dodgy number. It came out later and told us it was a dodgy number. Came out even later and confirmed it. All of these were dodgy numbers. But the market doesn't react on what it should be. It remarks on what is actually shown to you. And that's that's what moves it. And as you can see, it was a dodgy number, but the market went bang up and then eventually sort of came back down. And as we can see, moved over here. So you've got to consider both sides of the coin. And as I said, if we get a high number, that's saying, okay, well, we cut 50 base point. We've got some job that's done enough. I mean, it's only been a short amount of time. It's only been a couple of weeks, really. But, it's done enough to stimulate us. And now we've got some jobs. And look at the economy's bouncing back. And people are going to start chanting, sort of like, the economic miracles or whatever, or economic powerhouses or whatever kind of sort of stupid phrases they use. But the point is, if you see a big number, they're going to go, okay, well, we don't need to sort of really go as hard as we had. Because remember, the question now is 25 base point or 50 base point. And, if they're getting a reaction that they want, which is economy not sort of struggling so much, because remember, you're still balancing inflation and recession. So weak numbers, okay, we're going towards recession. Well, let's get rid of that. Let's sort of, combat that. Let's cut more. But if that need isn't there, then the other side of it is still inflation. They've got it down to an acceptable kind of level. But, if they cut too much, people are stupid. People will borrow ridiculous amounts. People will spend a lot of money. And what do you think happens? Inflation goes back up. So these are the things you need to consider because it's sort of like, this is how they're viewing it, or at least how the market is sort of viewing how they will sort of view it. So if they sort of come out with a big number, it means, okay, well, you know what? We probably don't need to do another 50 base point cut now because another 50 base point will lead to inflation. We don't have to fight the recession idea so much, so we could probably get away with a 25 base point cut. Remember, a cut is still going to weaken things. So it means that sort of like, realistically, we're not most likely not going to see, DXY way back up, 105s, 108s. I mean, anything is possible. But, you know, if they don't need to do a 50 base point, then you'll see some people take some pressure off and you will get a push up to the top side. So a hot number will give us a breakout here. Why this is kind of important is because you've got this falling resistance through here. Let's update this a little bit, actually. Let's put it right on this slide here. You've got this falling resistance here, which we've been respecting since June. If you break through this level here, you've got a confluence of things. You've got the big horizontal, which is this effectively this range over here. You've got this horizontal, so the sellers have been pushing it down, pushing it down. They've got another shot here to push it back down. If we get a hot print, that's going to break those two technical levels, plus get the idea that, oh, we don't need to sort of cut so much, so we can do a 25 base point, but the market's priced for another 50 base point, and we're going to see US dollar push off, and it's going to move back up. And then we're looking for these areas over here. You look for the areas where we've seen the sellers previously. We could potentially look for this range play to play out, even though we didn't get the breakdown here. So, there's a couple of upside sort of moves definitely through here. But I would say this price target 2 is where we'd be looking if we do get a hot print. It's not necessarily going to hit it in one shot. It's not necessarily going to go bang right to here. But I would say that over the next week or so, 2 weeks, who knows, as I said, it could be a trend changing thing. We could see a move back up to 103, 103.50, as I've sort of got marked out here. This potential move. This is what we could be looking at if we see a hot print tonight. So there are your two outcomes. This one back down here to continue the range, or we get a hot number and it goes up over here. And this is why I say that this time I think it's quite crucial because the emphasis has gone off CPI. The emphasis is now on NFP. We want to see, are these 50 base point cut, well, this 50 base point cut so far, is it having the desired effect? Yes, come back down. No, no, come back down. Yes, we move back up. So that's the outcome with DXY. So it makes it very crucial. So I'm actually going to go into this print fairly light. I've got a couple of little positions just to be part of it all, But I'm not really in the camp of sort of, trying to sort of call this. I think the move is going to be sort of shown over the next week or so, whether we sort of come back down over to 150 or whether we go up to 100, 103.50. They're my two areas that I'm interested in. So let it jump around as NFP does, and then let it sort of go, okay, bang, and now we're moving this way, and then take your positions. But by that stage will be next week. I'm not going to be doing anything at like 1 a.m. this night. All right, so that's DXY. Look, it was a little bit of 15 minutes just on that one, but this is the crucial sort of thing at the moment. This is a vital sort of turning point, I think, in my opinion. Anyway, so let's go on. We got gold. Gold is holding itself up very elevated. Look at this. It's really trying to jump around up here. Remember this part down here? Where was it? It was this. Geez, wow. How time flies. These moves over here. Like these are massive swings, but the point's still the same. You don't know what's happening. You're making newer highs. You're making, well, I suppose it was kind of in that direction, wasn't it? But chop, broke down lows. Here's your low. Oh, we've gone down to the lows. We're back up. We're down, like it's up, down, up, down, up, down. It's because we'd come from. Look at this move through here. This is where we've been coming from, and I remember at the time saying that this whole period through. Whoop, this whole period through here sort of was by design. And what I mean by that is that sort of like everybody, myself included, price target up here, 2,500, was thinking that, okay, we're going 2,500. Here's a high. Here's another high. Whoa, it failed really hard. It's failed down even more. I think this was really designed to sort of clear the book. You got new highs, new lows. It's kind of like whatever it's called, the ones that go like this, microphone sort of thing, where you got higher highs and lower lows at the same time. Nobody knows what's going on, and everybody's sort of trying to just sort of like, basically, it's just clearing the book, swapping hands with things. Look, if you're sort of long down here and you're a very staunch trader, good on you. But I remember saying at the time, these are $150 swings or so. You're pretty ballsy if you're sort of sticking to your guns if that's what you think's going to happen through here. I mean, so if you think that this move is definitely going to happen, you just held because giving back $150, that's I mean, you got to be pretty tough. Anyway, the reason I'm sort of referencing that is because we're in a smaller sort of version of this at the moment, albeit much smaller. But let's get down onto this. And as you can see, so coming through here, 2,700 is the next round number target. We had this as this last little push through here. We hit first price target and we failed. We're lower, 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 and we're back up. And now we're down, we're down, we're down. Like, you know what I mean? There's no real direction. It's not like we were sort of trading through this range, breakout, pullback, break. Like, there wasn't an easy sort of thing. This is very hard to get a read of at the moment. And this is, as I said, why I'm sort of referencing this. I think that's by design. I think they're trying to sort of just confuse people so they don't know what's going on. You're seeing the positions are swapping hands, this kind of thing. So if we drag these down here, we've got a touch here, got a touch here, and I think we just, whoop, got a touch more or less just here. So this is a line that, albeit not the major sort of thing, it is, as I said, when it was over here, I said it's run off on a bit of a tangent. This is an overthrow area of this big sort of rising resistance. I said, look, we're going to see some cooling off, and it has. It's come back down here. So we're coming into a little bit of a triangle through here. Not a massive, like, I don't think this is like, wow, here's the triangle and this is all of it all, but I think it does give us some pretty decent little levels that we can work off where we're going to sort of say, are we going to see a break at a break high? Because as I said, here's one high, here's another high, well, here's another high. You know what I mean? These highs are moving down. You've got the lows are moving up. It is coming into a bit of a triangle through here. What if we drag? Whoop. Why is this not working? There we go. Even if you just drag those two through there, I think this is giving us a pretty well-defined, like yesterday I said this is the box, but if you watch what I said yesterday, I said, look, this is the one that puts it on notice, a close down out here, but I wouldn't be jumping on shorts here just for the fact that we had this extra zone just down underneath it. And as you can see, test, 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 bang, came back up here. So look, again, with everything going on, it's hard to sort of jump on sort of heavy shorts, but certainly, intraday shorts, very much an option here. I'd drag this out a little bit. Again, you got the same sort of thing though. Even if you break down out of this box, if we say this is the new consolidation, which seems fair, a fair sort of call to make. So it's not doing very well with the clicks this morning. Where's this thing? This one here. This is your next little support area down here. But I would say these are probably your main two levels that we're looking. This one and this one here. If you want to see direction. Underneath this, we got supports. We got more rising supports. We got more horizontals. We got retests. So I think the downside is probably somewhat limited, but it doesn't mean that it can't come. So if this lines up with anything, so this it's just so choppy. You can't make a channel. You can't do anything out of this. Get rid of that. Irrelevant. Um, yeah, it's a hard call with metals. We're at all-time highs. You've got the stuff going on in the Middle East, and everyone's like, oh, and look, to some level, it seems like it's escalating, but we talk about markets, or I talk about markets, and I don't think the markets particularly care. Like, it's elevated. Okay, it cares in the sense that it hasn't fallen down, but as I've said, the last couple of weeks, I think USD is the bigger driver of gold prices at the moment than what's going on in the Middle East. And I don't think people are necessarily going to US dollar for safe haven because of that war. I think, as I said 2 minutes ago, I think people are going to US dollar because they've overestimated the cutting cycle of the Fed. I think that's why they're seeing a little bit of a pullback on the US dollar, which then is then sort of impacting gold. But, well, it's very marginally impacting gold. But the point is that I think that sort of like, for the time being, yes, it's staying very elevated. But if the war and the escalations were the driver, we'd be seeing larger spikes. Like these are decent moves. What's that? 30, 20, $25. It's not too bad. I mean, it's certainly a decent move, but it's not your insane rocket moves. We're not seeing a breakout like this. I mean, this wasn't even war news or anything. This was like, back before this latest escalations and all this kind of stuff. We're not seeing these kind of moves. This is what I would more likely expect to see, bang, 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 going higher, higher, higher. And look, that could come, definitely. I do believe that we are going higher with gold, but it doesn't mean that we can't sort of come down first before we go up. Because remember, we're back here, the 23% of this last move, that's still very bullish. So we're very much sort of consolidating the highs, but you can still come back to the 38, which is 2600, and still be bullish. It just gives you a better price. I mean, you've $57 move from down here. And look, when gold actually gets moving, I've seen it move $57 in a session. So, you know what I mean? Like, it's not beyond reasonable doubt. And generally with gold as well, it'll do a little fake down before it goes up when it is going to move. It generally won't sort of dribble, 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 and then run up. Gold loves to sort of just screw people out of their positions first. So, look, for the time being, I'm holding fire. I do think we probably have a little bit of downside on some metals, but I would like to buy to get long, but I would like to buy down lower. I would like to buy around 26. 26 around this 38%. I reckon that could offer a better risk reward. Because remember, still never had that sort of retest of this big range that we're in. So that's my big buy zone down here, retest of that down there. But I think if you get down here, you got bigger problems to deal with, like as in, channel breaks and all this kind of stuff. But if you look at this in terms of where that potential channel would be, as you can see, it's gone off a steep gradient, these ones, and then sort of steeper again. I would say there's definitely a chance of this sort of having a little bit of downside. And this is why, again, I sort of say that this NFP print is quite crucial because, as I said a moment ago, I think the bigger driver with gold at the moment is US dollar opposed to the war. The war's obviously still acting and sort of playing into it a little bit. It's not purely one or purely the other, but I would say the main driver is the US dollar. And why that's relevant is because if we get that sort of NFP print that's a little bit stronger and the US dollar breaks out and the US dollar is the driver of gold, well, gold's going to go down. That's my feeling. That's my play. That's my plan. And I think that's certainly a possibility. You know what I mean? Whether it's thinking that the numbers are dodge, or whether it's thinking that maybe the US is actually doing something halfway decent. Remember, there was a period back there where everyone was coming out with like very weak economic data, and the US were just, I can't remember the term that they were using, yeah, US economic miracles or something like this. I don't know, but that was certainly what the way that people were playing it. And so I think a lot of the market's very short on US dollar. Like if we go back to DXY very quickly, and you look at this in terms of a full move. Oh, look how good we are. I've already got the thing done up. This one here. So update this a little bit to the full lows down over here. Make it, wait, cancel that. Make it very nice and thick. Bang. We're still at the 23% of this drop down here. You know what I mean? Like there's certainly room for this to move up to the top side here. You come back up to here, price targets. We've got some horizontals here. This is still 50% of this whole move down here. You know what I mean? So I think a lot of the sort of extreme cutting of the Fed is priced into this move here. So it means if they don't need to cut extreme again, there's a good chance this comes off. If this comes off, as I said, I think the flows are going to come from the metals. So I think there is some downside. Again, this is the move that I think is going to happen. I still think US dollar is going to go down here, but it doesn't mean that it can't sort of go up before it goes down. Squeeze out, smash a couple of people in their crosses, USD crosses, smash a few people in the metals, take some sort of heat off it all, and then sort of drive it back down. So, geez, it's a bit longer today, 26 minutes, and I've only done DXY and gold. Okay, I'm back. All right, let's chug along. So we got all right. So let's just finish off. So gold, as I said, I think the potential for this to sort of pull back before it goes higher. And that in short term, let's get into say the 1 hour. So what we can see here. Look, again, it's just a really sort of respecting these two levels here. Top side of this range. You've got this falling resistance here. Look, if this moves up. 63 will be an area that'll be interesting to see if we can get above. You got the confluence of the falling resistance here. You got this horizontal. So this is a little bit of an upside potential here. You break below 54, and really, I assume you're just going to be sort of, respecting this range and that. Possibly this could be a bit of an overshoot down here. But if sort of fired back up over here, I think part of this as well, I should have covered that. I think it was maybe some of this move. I can't confirm this on some of Biden's comments about sort of, I think it was something to do with attacking Iran's oil refineries. Obviously, this kind of stuff not great. Oil jumped off that one, and in that respect, I mean, you can see that gold obviously had some reaction. I can't confirm that that was the move though, because I don't know what time he was making those comments. But in terms of the thing, I would say, look, you get above 63, you're looking at 72. I don't see it going past 72 in prior to NFP. Break below sort of 54, I'd expect the range just to continue. You'd be looking for, say, 47, and then maybe downside looking at 43. So let me just put a couple of these on here. Intraday, 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 intraday. As I said, I'm remaining pretty light. I mean, this coming down here has a rising support. This main one coming through here. So I'd imagine buyers to step in from over here if we do get down to 42. So if you are trying to sort of short intraday sessions from 57, I would say 42 is about your sort of your take profit levels and that. I wouldn't say we're really going to go. I'd be surprised if we break through these two levels. But if we do, we know where it's going to go to, because you're not going to see major breakouts prior to NFP. All right, flip along. We've got Aussie. Aussie played very well. Look, I've been playing the downside of this for the last couple of sessions and that. It's worked out quite well. I sort of stepped off the screens last night, and I sort of took my bank around 47. I took three lots and from 47, 51, and 43. My price target was at 32. So as you can see, I had the alert set down here at 30, clipped it perfectly, and then back up over here. So where this is at the moment, look, how did this sort of play move out through, measured move, move through here, measured move, play out through there. So now, if we look for a little intraday play, we could say, this is where it's been, what's going on here? There we go. This is where it's being capped at the moment. So this is a little zone, and down here. Again, I don't expect big moves prior to NFP. I think we're in for a pretty quiet sort of day. If we do get a move up, I would say this is the kind of area that we're looking at. We could say this is the horizontal coming across over here. This was the big sort of move down here through yesterday. I would say 71. 71 would be interesting, and I wouldn't mind being short because, as I said, I'm probably more in the camp that we are going to see a little bit more US dollar strength. Again, doesn't mean that it can't go one way before it goes the other. But if we get up to this level over here, depending what time and how we come into it, but if we get a move up to here, I will be looking to probably short that based on this falling resistance, this horizontal, and completion of body fill on this drop down over here yesterday. So this is during death hour. It's my own name for it. It's London pre. Generally, London pre, you'll see these kind of moves where it's moving in one direction beautifully. It's coming down, 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 and then jerks right back up in the opposite direction. Or if it's going up, it'll jerk down. People take their profits, and then bang, resumption of the move to the downside there, as the medium main trend of what we're seeing, which is obviously is coming down here. So it was good. I sort of added more shorts. Actually went pretty heavy through this move coming down here. As I said, I've been sort of playing the idea of that DXY move to the top side this week, and that's why I've been shorting the Aussie, because it's not just the basket with that, it's the US dollar as a whole against the whole market, basically. And other factors weigh in, particularly with Aussie, the fact that they've got a bit of a sort of a hawkish central bank, certainly in comparison to the Fed in this instance. But I think that's what's kept it from coming down to here. You know what I mean? In the past, Aussie, the favorite pastime of the market is to sell Aussie. And when it sells, generally it sells pretty hard. But this has been quite a controlled sell down. So I've been in and out as I do with my sort of style. But I am all out of Aussie at the moment. I would like to sort of short some more, but I would like to probably get it from 68.70. And then I would like to sort of move down towards the sort of 68 cent mark before we sort of start to look to sort of assess whether we're going to sort of start to get long with things. But as I said, if we see a continued move with US dollar, well, there's no reason why you can't see a continued move with Aussie to the downside and, retest some of these lower sort of fib levels around the 50 or even the 61%. Remember, the 61% is a very common reoccurring level. You get down to 67 40s, I'll be jumping on for some longs by this stage for sure. But for the time being, we've obviously broken this channel. We've retested. It's doing everything it's supposed to be doing at the moment. So I think, as I said, I think today will be quite quiet. I don't think there's anything really super to be gained by trying to sort of, position yourself too heavily prior to the news coming out. I've got an idea of where I think it's going to go, but obviously when we see the print, you'll see some fluctuation, you'll see some move around. But I think the big move is going to come, through the end of the week, last couple of hours setting up. But the big move is going to come through next week. I think this is going to be a trend-setting bit of data coming out today, and then it will come out exactly on the on the expectation, and we'll see nothing. So who knows? And I haven't actually planned for that, but I think I expect a pretty decent number, 40,000. 40,000 either way, either 170, 180, or 110. They're my two sort of predictions. We'll see how we go with that. So yeah, for the moment, look, if you want to get above 53 for Aussie, I think you could see a move back up to the top side of this falling resistance over here. 71 would be an area which I'd be looking to be sort of taking a bit of profit. I think that's a reasonable area where we've got this horizontal through here. You know, we did the retest and breakdown. As it comes back up, like I say, over and over again, it's not going to go through first time. You're going to see some sort of pushback here. As to whether it sort of pushes back and then goes even further, well, we got to wait and see with that one. Downside, you get a close underneath 35. I think you're looking at 18. And then realistically, you know, between 68 and 68.20. I know it's a fairly wide area, 20 points there, but I reckon that's where you could see a little bit of reaction coming down here before I move back up over here. But as I said, I'm pretty flat. Well, actually, I'm fully flat on Aussie at the moment. Flip across quickly with copper because copper is the one that obviously is going to be impacting the Aussie. And this is what I was saying yesterday. It's, you know, we're very highly elevated up here. This is an extremely strong level. It moved up and it got absolutely bashed on the nose. And these are the levels that I was saying. Look, this is where we're looking to target. And this is where it's come back down to. You know what I mean? We don't sort of just pick the numbers out of the air. These are the areas in which we've seen the market react previously. And this is the whole idea of being able to sort of read the flow is this kind of thing through here. So, look, again, I don't think necessarily we're going to get a break prior to the data tonight. But if we see a break, if we see a high number, US dollar strength, look for lower levels on copper, in my opinion. I still think we could come back down over here. We're still at the 23%. We've tested it once. We've tested it twice. There's no reason why we can't come down the bottom side here. And as I said, probably back down to 438. I wouldn't mind sort of getting long and having a shot from down here between these two fibs through the 50, which is this high here, or the 60, which is also a level that we've seen as a resistance, 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 resistance. It played its active support. What's not to say that if we do get down here, this will be our buy zone. Here. I think I need to rename these things. I'm gonna call it buys or buy zone or something. Buys. Yeah. Excuse me. Buy zone down here. I think that's a fairly decent sort of level if we can get this. Retest, we could see how strong this was from initial breakout of the falling resistance. It's a falling resistance, initial breakout, market stepped in. Back to our buy zone. This is perfect, that one, if I don't say so myself. Came back up here. Again, resistance, resistance, broke through, support. Comes back here, won't go through first time. This is why this will be our buy zone if we get back down over here. That's a fairly decent little chop down. And again, these things don't go in one go. But I think this potentially is you move up, you move back down, and then we sort of regather, and then we sort of start to go up. And maybe we look for something like this as a bigger range to sort of play. But for now, I'm just going to drag that out because I think that's worth keeping a note of. That's potentially what we could be looking for. And like I say, with these things, you generally have two parts of the range. So this could very, very easily sort of break into a top half. A bottom half, we could see back, forth, back, forth, back, forth, break back up to the top half here. So that's a bit more sort of forward looking. But I certainly think, again, these things are all lining up with potential cooling in mind. Even though, yes, this move here is bullish. Everything's looking like it wants to go higher. And look, in all fairness, I do believe it will. But it doesn't mean that things can't cool off and snap people out first. Because remember, it's not easy. A lot of people lose money. A lot of people don't have a clue. So, you know, where's the easy money, the pain trade? Well, it's to do opposite of what the actual thing is. People are like, well, look, it's bullish, it's going up, let's buy it. It comes down here, I don't know what's going on, I've lost all my money. Okay, sell me your tears, I'll buy it here, and then it will go up over here. So that's my plan of attack. China. Played out perfectly. Well, you know, it hasn't perfectly sort of completed it so far, but this is the plan to sort of move up through here. We got there, as I said, on the weekend, potential sort of head and shoulders kind of thing playing out. If this completes, if we see the US dollar take off, well, like, again, this is going to take it out of this little channel here. This is what's going to be weighing on Aussie if we see a break through this level over here. So interesting sort of times to sort of see what happens here. It is sort of obviously still underneath this sort of falling resistance, so it could still see this move play out and sort of come back down here. But now you got to sort of respect the idea that we may actually see a push higher. Remember, I showed that thing yesterday. I think it was A50, whatever it was. Let me get across to this quickly. I think it was this one. No, it wasn't this one. Anyway, look, this is still the same point. This move here has come very strong out of absolutely nowhere. Well, not nowhere, we know why it happened. I don't particularly like that line actually. Probably more that actually. Hindsight, But that's not what's important. What's important, in my opinion, is this gradient and the steepness that this has gone up. A move like this doesn't continue. It's not it can't continue, it doesn't continue. I'm not saying that this is the top, it could still go to here, but the higher it goes, the sharper the fall is going to come. What's going to happen to the yuan, to risk sentiment when this market starts crashing back down and coming down like this? You know what I mean? Again, look, it could still just be healthy pullback to then do this, but this leg will come. I'll start sort of just referencing this very quickly to sort of show how this will play out. But this move will come. People will go, oh my God, no, it's failed. It's not going to work. Risk will get shattered. One will sort of probably weaken. And we'll see everybody sort of go, and Aussie will sort of get crushed on that. So that's why I think that we do have a little bit of downside sort of to come with those sort of things. But if we flip across, we're on copper here. No, sorry. Here we go. So this is back onto the daily. It's got room to go to move up if it wants to sort of flip and take out and keep moving up over here. So I think this will be interesting, particularly back up above this zone over here, back above sort of 707. We've got a couple of other resistance levels to sort of deal with, but I think we could be looking at a bigger picture of say between 7 and 712 in the short term. Again, these things aren't necessarily going to come back up over here. I'm not saying that, okay, we're going to see a full shift of the market, but it does sort of mean that we're potentially going to see some cooling and shifting, even if it's a short to medium term, which will give us better levels with the other things we're trading, and then we can sort of get back to it. All right, so, well, a bit of a longer one today, but, as I said, these are crucial things, and you need to sort of weigh them up and sort of all together. So let's have a quick look at news. As I said, NFP is the main thing that we're looking for at the moment. Look, Asia has just got nothing. Asia's been super quiet. I mean, apart from the fact China's been on holiday all week, Asia, in terms of data, has been very quiet this week. As you can see, nothing through here today. And then nothing really, and then NFP tonight. So this is the big one. As I said, I've already laid it out on what I sort of think is going to happen with the cold prints, but I would say my feeling is probably a 30, 35, 40,000. So say 30 to 40,000 number discrepancy. So 187 to 107, maybe 110. Sounds a bit more round number. All right, that's it from me.